Hello, good evening, everybody. Right, thank you for joining us for this live webinar on price reversal setups that works. So my name is Stephen Ong, your presenter for tonight. So we'll be starting the session proper at about 7 p.m. So we'll give some more time for those who are just about to join us. So meanwhile, for those who have already signed in, please do scan the QR codes to sign up for the MK5 demo accounts and ND5 trading accounts to try out the most advanced trading platform for Forex and CFD trading. And meanwhile, please read through the disclaimer statements and I will speak to you soon. Okay, once again, thank you for joining us for our live webinar on the price reversal setup that works. So again, this is Stephen Ong, your presenter for tonight's session. And I'm a senior account executive with the Phillip Futures and Phillip Investment Specialist with Phillip Securities. So, before I begin my presentation proper, just like to do a sound check. So if you can hear me loud and clear, just type yes into the question box. So also during the webinar, if you have any question, do type them in the question box, and I'll try to answer all your questions during the Q&A session at the end of this webinar. So okay, that's good. So it looks like everybody can hear me clearly. So I will begin our webinar tonight. Okay, good evening, everybody. For those who just joined in, once again, thank you for taking time off from your busy schedule to attend this webinar. For those who just joined in, all right, my name is Stephen Ong, right, your speaker for tonight. So I'm also delighted to share a topic which I'm passionate about, that is trading stock CFD, Forex, commodity markets with these price reversal setups using the MT5 platform or the MetaTrader 5 trading platform. So for those who are new to trading, Phillip Futures is the first company to introduce MetaTrader 5 to all the traders in Singapore. And not only is the MT5 platform the most advanced trading platform available in Singapore, it is also completely free to use. And It comes with zero transaction costs, right? Zero commission, and with amazing functionalities and features, right? So not only is Amplify the most sophisticated and advanced platform, it's also the most user-friendly platform ever introduced in Singapore. So it's also the best trading platform ever conceived and designed, especially for retail traders. So it's also actually free to use and no platform fee, no data fee, and most importantly, zero commission charge. Right, so MTFI combine all these advanced technology of order execution and distributed computation so that you can create and implement your most ambitious trading ideas with a click of a mouse. So what are you waiting for? Scan our QR code and download a free copy of MT5 platform from our website and right, sorry, so that you can choose and trade with the most advanced trading platform in Singapore. Okay, just a brief intro myself. For those who just joined, my name is Stephen Ong, right? I'm a Forex and Futures broker with Phillip Capital. So over the years, I've been awarded for contribution over as a CFD specialist with Phillip, and also been invited by SGX to share my knowledge and expertise about investing and trading with all the interested investors. So my goal tonight is simple: to assist traders like you who are interested in developing right solid trading strategy suitable for the trading interest, right, and according to your risk tolerance and resources. So while remaining flexible enough so that you can capitalize on market opportunities when they arises. So I hope we're able to provide traders and all the listeners to this webinar with the market news in a timely fashion so that when the opportunity arises, right, you'll be able to capitalize on this and realize your financial objective while effectively managing um, your risk. So my aim tonight is simple. So I just want to equip traders with an audience listening with the benefit financially from my experience, knowledge, and enthusiasm in trading forex, CFD stocks, and through this working business partnership, we're able to develop an understanding of the principles and factors, events that affect the price and market movements. So for traders who like to embark on this trading journey, do remember to sign up for the MT5 account at the end of this session. And I hope by the end of this webinar, we're able to sign a win-win business partnership and share many successful trading stories for years to come. Right, the proceeding for tonight's presentation is as follows. Right, so in the first session, I'll go through the main topic of the night. Right, that is price reversal trading. Right, so how to use, I'll be touching on how to use a price reversal trading indicators and the trading techniques are set up to analyze and identify entry and exit signals. And I'll also be covering price reversal concepts and trading principles that is essential to successful price reversal trading and the process is needed right for successful trading in using these price reversal setups. So after which I'll try to answer should you have any question about tonight's webinar or anything about MT5 or any other products offered by Phillip Futures, do type into our question box and I'll try to answer all your questions. And in the event if I'm not able to answer a question on time, I'll try to reply to you by email right in the next 24 to 48 hours. And lastly, if time permits, I will try to do a demonstration on the MT5 on how to use the MetaTrader 5 trading platform, right, and how traders can submit orders and how you can read charts and analyze for price reversal setups. Okay, so for those who have been trading or you have read a lot of trading books, you have probably heard this a million times, right? Do not trade against the trend, right? Trends, friends, and so on and so forth. But here's the thing, right? Price reversal trading can be highly profitable for traders who apply correctly. So for price reversal traders, usually they know how to determine the high probability price reversal zone, identify market tops, bottoms with a high level of accuracy. So with that, they try to determine the potential trading reversal setups, right? That can produce a 1:5 risk-reward ratio or more. So in this webinar, right, listeners will discover the indicator that I use to trade price reversal like a professional. So for traders who wants to take your price reversal trading strategy to the next level, stay tuned to this webinar. Right, so are you ready? Let's take a deep breath, sit back, relax, enjoy this rest of this webinar. So without further ado, let's begin this class. Right, so first thing first, we need to define what is price trend reversal. Okay, basically a price reversal is the end of one trend and the start of a new one. Okay, so basically market can change from a bullish trend to a bearish trend, or from a bearish trend to a bullish trend. So this is basically a price trend reversal, depending on how you want to phrase it. So price trend reversal can arise to uptrend or downtrend. So following an uptrend, right, a price reversal could happen and disappear to the downside. So following a downtrend, price trend reversal will be on the upside. So basically, what happens is that from bullish trend it becomes a bearish trend, and then from bearish trend it turns over and becomes bullish. So price reversal are based on the overall price direction and not typically based on one or two periods, right, or one or two candlesticks on the chart. So it takes place over a period of time frame that the traders are monitoring. Okay, so price reversal trading is pretty much finding out when the price turn and trade in the opposite direction. And so do take note that some price reversals are merely retracement. So that means that basically the market is taking a breather after a quite sharp sell down or rally, and then the trend continue beyond the same side. So there's no reversal in the trend. So others are actually a long-term market direction changes, as shown here on this chart. Right, market fell from bearish trend, and then it reversed and become bullish. Right, so this is what they call a trend reversal or price trend reversal. Right, so timing such a price reversal with a high degree of accuracy is one of the so-called investigated territories in the technical analysis. But with the help of this reversal indicator, which I'll show later, right, can help traders to increase the odds of successfully timing the market. So for experienced trader, right, it's no mystery that the natural cycle of price action is that it switches from small range and then it becomes a big expanding range. I can see on this chart. Right, market is small in range right before that, and then when market fell, right, you see that the range of the Greek candlesticks gets wider and wider, expanded. Right, so especially the last candlestick, the range of the last candlestick is right almost half of what the previous fall in the price. So the daily range is the difference between the daily high and low. So this price action or price movement oscillate from narrow to wide ranges and back again, right, as you see this chart. So from a big daily ranges expansion, right, prices contract and then there's a small daily range. So this is a very common phenomenon that you find in chart, right, or most of the market that traders, especially when market goes through a period of volatile period, prices fell and the price expand, and then there's an expansion period whereby the price range of the candlestick is very wide. Subsequently, when volatility dies down, there'll be small daily ranges that the candlestick become very small and there's a period of contraction. Okay, so the indicator that I utilize is designed to help traders to determine the daily high-low range to find price reversals, based on this concept of daily range expansion and contraction of the price section. Okay, so this is an important concept that traders need to understand that how these indicators will help traders find trend reversal. Okay, to the new traders, right? Maybe like they may sound that reversal trading may be a bit risky trading strategy for the new traders, because to the untrained eyes, right, price reversal may sound like catching a falling line, right? This is a very common term. They don't catch a falling line when the market is in a crash, but some traders catching a falling line has no handle. That's why you get a self cut. So never try to catch a falling line because there's no handle. You get self cut. Right, but actually, like many other traders would do this, but they know that the end result catching a falling line, as shown in this chart, right, can be quite damaging to your trading account. Okay, so the same thing happens when traders try to catch the price drop. So that how to know when is the downtrend ending. Okay, so the first question trader do is that when you see this chart, when will this bearish trend end and maybe start of a new trend? We have a start of a trend reversal and price reversal from a bearish to bullish trend. So for traders who place a handle end of this line, they will, with enough practice, they can identify this trend reversal like a professional trader. So with this strategy, which I'm going to touch on later, the handle that is used to catch this falling line is what they call this mass index price reversal indicator. Okay, so this is the indicator that I use, and we're going to talk about how traders use this to find clues to determine if market is going to reverse trend with this mass index indicator. Okay, so this mass index indicator is the indicator which I personally utilize to determine market reversal. So for traders who have never been in a trend or traded or have been stop up and they've been trading the market, but usually they have a tight stop and their stop are triggered. And later when the price action, right, they go back to the favor when the price is in the favor and it goes in the direction that they wanted to go, then this could be quite frustrating for traders who trade with this price reversal. So this webinar is your guide to price reversal trading, and it's going to help traders to identify and find price reversal like a professional short-term trader. Okay. So a brief intro, this mass index indicator was developed by Donald Dorsey in the 1990s. Right, so basically it's a form of technical analysis that is invented by him that's used to determine when the price trend reversal is likely to happen. Okay, so mass index, right, basically belongs to a family of volatility index, right, that is help to determine which direction they are. Okay, it's a family of volatility index that doesn't have a directional preference, so it makes it easier for traders to determine which direction a specific stocks Forex pair is trading. So as you can see on this chart, when the mass index is indicated a possible change in the price trend, right? There's a likelihood that the price reversal is likely to occur, and the price daily range, which I mentioned earlier, the concept between expansion and correction, right? It widens and then it contracts. Okay, so in other words, the price reversal rises when the volatility is high. So you can see here on this chart, the candlestick pattern, right, prices for this volume fell and then it recovers. Okay, so with this mass index indicator, which is shown on the bottom half of this chart, shows that with this indicator can help trader determine that it's likely to be a price reversal when prices fell and recover sharply from this sharp fall. Okay, so subsequently there's a few other indicators which tell traders that there's a possible change from the bearish trend and maybe up into a bullish trend. Okay, the way to interpret this indicator is very straightforward, right? Just need to take note of two readings on this mass index indicator to measure the market volatility. So according to Mr. Donald Dulce, right? So when the market gives this reversal signal, right, this will happen when there's a reversal bulge or reversal harm that will follow this change in trend. So this reversal bulge, right, is nothing more than is shown here, which I think on previous chart we have seen it. It's just a combination of two trade signals. So as seen in this chart, right, you can see here, right, the mass index values, right, you need to go above the 27% level. So these are the first critical level for traders who use this mass index. You need to take note of is the 27 level. Okay, so this 27 level is set by default by Mr. Dorsey. Okay, so it's default at 27. So of course, if you have the discretion to change it based on your trading preference, right? But I think 27 should serve just fine. And the next level to look for, right, for traders who use this indicator is to look for the reading of the price range of 26.5 level. Okay, so you can see the first thing traders need to look for who use the method is to look for the reverse bulge. Okay, why reverse bulge? Because when prices fall, right, for most indicator you follow the price action, you will show you a downtrend. Whereas with this mass index indicator, instead of following the direction of the bearish downtrend of this dollar yen fall, it reversed in direction and then the indicator went up above the 27 level. Okay, so after that, it fell when the price action of dollar yen went up, rally up. Right, so you can see there's a reverse bulge or reverse harm, like a road harm, on the road. So this is a road bump that shows that potentially there's a possibility that this dollar yen will going to change from the bearish trend into a bullish trend. So this indicators will show that, okay, once the price breaks above 27 and then when it fell below 26.5, right, there's a confirmation that price will reverse and price will rally therefore, right? So this is the mass index um, indicator. So you can see that the most important thing with this indicator is that they preferably comes together with the period of expansion and contraction. Right, you can see here, right, the candlestick, the daily range is expanded, right, because especially the last candlestick here, the range is almost half of the before the market fell for this dollar yen, and then subsequently there's a period of very small tight daily range, right. This is a period of contraction. So this mass indicator, sorry, mass index indicator is designed to capture this expansion and contraction so that uh, when the prices reverse, you have this trend reversal, there will be a reverse bulge, right? We tell the traders that, oh, okay, watch out for this price may reverse, and maybe if you're still shorting, maybe you should consider to exit your short positions and turn long, right? And if you don't have any position, maybe you can consider to take some long positions, right, with this mass index indicator. Okay, so as you can see, I mean, like I mentioned earlier, this is quite a new indicator because it's only designed the last 20 over years, right? 1990s, because most of the indicators have been designed like in the 50s, 60s, or in the 80s. So this is one of the so-called pretty new indicators which I seldom hear traders talking about it. Okay, so to reiterate, right, the initial reading above the 27 level, right, will signal to traders that the volatility expansion may be at its highest, right? So when it's highest, and then when contraction set in, right, then the price possibly there's a price reversal. Okay, so traders need to be flexible at this stage and then just watch the mass index indicator to see whether the indicator can sustain itself above the 27 level, and to take note and when the prevailing downtrend may end in the short time, because when the volatility is high, usually markets volatile. So in this case, right, the bearish trend may end in a short time frame. That means it could be a next day or next hour. Okay, so with this mass index indicator, traders will know that okay, the possibility that price may reverse. Okay, this is confirmed at the mass index reading. Right, it drops below the 26.5 level. Right, so this is a confirmation that the reversals have taken place, and the price now has turned from bearish to bullish, as you can see here on this price. Right, prices fell and then recover. Right, this is confirmed by the mass index, whereby prices went above 27 and then they fell below 26.5. Okay, so as always, right, a reverse or bulge or reverse or harm occurs during a downtrend. So this will tell a trader that the bullish trend reversal, right, is going to take place. Right, so bullish trend reversal, right, from bearish to bullish. However, if a reverse bulge occurs during uptrend, right, this will tell the trader this is a bearish reversal. Okay, that means from bearish trend it's going to change from a bullish trend into a bearish trend, from uptrend to the downtrend. Okay, so this is a reverse bulge in the uptrend if traders is able to identify this reverse hump. So chartists who are more innovative, or they prefer a shorter time frame, they can choose to lower the threshold level, right, from 27 to lower. Right, of course, this will give the traders more signal and generate more false signals. So just beware. You need to be comfortable with a low threshold. There's a possibility that there will be more signal generated, and so one size does not fix all. So when it comes to volatility, it depends on the risk appetite of the traders, how much risk they can stomach. So in other words, right, chartists or traders may need to compare the mass index levels over time to identify historical highs and lows for the product or the stocks they're trading, so that you can find a comparable threshold level for them to fix on the trading. So basically, move near the high end of the historical range could usually suggest to trader that a volatility bulge with this mass index, right, could predict a possible reversal in the market that they are trading. Okay, so like I mentioned, this mass index indicator price reversal is a very powerful strategy that's used by traders all over the world to determine trend change. Right, so basically traders can find successful trading opportunities that comes together with this, that maybe other traders who are not using these indicators may miss out. So tonight I'll touch on 3 steps strategy or 3-step process that will help traders to find these high probability bullish or bearish trend reversal signals. Okay, using this mass index indicator. Okay, so the first step is key to find the prevailing trend prior to the reverse hump of the reverse bulge shown by the mass indicator. Okay, so that's the first step. And then second step, once you find the prevailing trend, look for this reversal bulge on the mass index indicator. Okay, so this is the second step, right? So, and then the final step is to use additional indicator, okay, to confirm and to generate a directional signal, right, that is in sync with the trend reversal. Okay, so basically this is a 3-step: find the prevailing trend, find the reverse bulge, and then use the third indicator to confirm the signal. Okay, so the first step we will touch on now is the to determine the prevailing trend. Okay, so some of you might be asking, what is prevailing trend? Okay, prevailing trend is the current trend, right, that is happening right now before the trend changes. Okay, so let's take a look at this chart. So right now, I believe everybody will agree this is a bearish trend. Okay, so this is the prevailing trend right now because market is the price action shows that yeah, there's a series of low and low highs prices fell and then try to recover, and fell again, try to recover and then fell, create a low and lower high prices. Okay, so this is most trader will define, right? Just visually looking at it, is like this chart is showing a bearish downtrend. Okay, so as we zoom out this chart, you can see the clear picture of what is the preceding trend. You can see that so once the dollar yen chart is zoomed out, reveal that the previous trend is bearish and then now it has reversed and now it has become bullish. So as always, those bullish traders or hawkish traders assume that once the bullish reversal signal, right, will follow when the prices will reverse. Okay, so the price now has changed from a bearish downtrend into the bullish uptrend. Okay, so now the trading bias has now turned right from downside, right, from bearish, and then once it hit the down point, the low point here, right, this green candlestick, green doji candlestick, the prices has the trading bias has now changed from bearish into a bullish uptrend. Okay, so with that, this is the first step. Okay, we just look at the bearish downtrend first. Okay, then next we will incorporate the mass index and see how the mass index is going to help traders to find the reverse of this trend from bearish to bullish. Okay, so step two, like I mentioned, is to find the mass index reverse bounce or reverse harm. Right, so using back the same dollar yen chart, you can see that okay, we have zoomed in for this dollar yen chart. Once you add in the mass index on the bottom half of the chart, right, look for the readings, right, look for the reverse harm. So you can see that near the middle of the right slide, right, the prices, the mass index readings is approaching 27. So the 27 threshold level is the reading that traders will be looking for those who use the mass index indicator. So once the prices right hits above the 27 level, this right is a possibility that there's a reverse bounce will occur. Okay, so the harm will rise and then it will fall below the 96.5, which is the next threshold level traders will be looking out for. So once that happens, the price will likely to reverse and prices will change from a downtrend and then recover, rally up into an uptrend. Okay, so I can see on this dollar yen chart. So once the mass index indicators rises above 27 and falls below the 26.5, right, prices rally and continue to rise further. Okay, so you can see that this indicator can indicate to the traders that there is a high degree of possibility that the market will reverse right together once you have this indicator and plus this green doji candlestick. So this signal to the traders that price reversal is going to take place and happen from that. So those hawkish or bullish traders, right, will study in and take a long position, or if they have been shorting, they'll close your short position and turn long. Okay, so the two numbers the traders will look out for is the 27 and 26.5, right, for the mass index readings. Okay, so the third and final step traders will use to look out for is to add in additional indicators. So for me, I will usually choose a stochastic for confirmation as a signal trigger. So for other traders, if you're comfortable with other indicators, you can add in one with the mass index indicators. Right. So So for if you are not familiar with stochastic, you need to sign up for this. You can sign up for a Zoom trading session if you are not familiar with these stochastic uh, indicators. Okay. Right. So following the previous example, right. So right now the hawkish traders will have to establish their trading bias, right, with their mass index readings, right, the long or short or the downtrend. And then once it has successfully identified the mass index bullish reversal signals, right, we've gone through the first step, right, that is to find the prevailing trend which is bearish. So once you find that, well, you need to find the second reading, which is the mass index reading, right? So once you wait for this indicators, the mass index to hit the 27 level, and once it fell below the 27 level and fall below the 26.5 level, is a confirmation that the price index is a price action has turned from bearish to bullish. Okay, so you can see here the third step. Once we add in the stochastic level, right, the indicator will confirm that it is a crossover, right? There's a possibility that prices will rally from a bearish downtrend to a bullish downtrend. Okay, so prevailing downtrend is identified with this bearish downtrend for first step, and subsequently the second step is to find the reverse plot over here, and then subsequently with the crossover, the stochastic, right? You can see here the bottom half of the slide. Right, this arrow show that right, this is usually places where traders may consider to take a long position. Okay, so there's a trend reversal change from bearish to bullish, and this is confirmed by the reverse part of the mass index, and of course the this is double confirmed when the stochastic crossover of the indicators. Right, highlight to traders that right, the trend has changed and now the trend is on the upside. Okay, so all the trader need to do is take long position and put a stop loss, right? Manage your risk and ride out on your bullish uptrend, right? So you can see on this chart. Okay, so it's the previous three slides which I mentioned, right, incorporates the three steps mass index trading strategies. So you may consider any more indicators you want for trading signal confirmations, but for purist mass index traders, right, so usually they will just want to trade based on the max index, and this is the strategy that I use if I just want to just looking for the price reversal, trend reversal in the market that I'm trading. So basically, in this strategy itself, the mass index value for long strategy, right, that means you want to buy low and sell high using this mass index indicator. The MI value should touch the 27 level and then it falls back below the 26.5 mark. Okay, so this is the long strategy, and then wait for a candle to close, right? Wait for the candlestick close bullish to enter the trade. So with that, traders can consider to put stop loss slightly below the swing low and take profit when it's twice the size of stop loss or more, right, to ride out on the uptrend. Okay, so for short strategies, traders who intend to sell high and buy low using these mass index strategies, they should wish for the mass index to go above the 27 mark and then fall below the 26.5 mark. Right, so the preceding trend should be an uptrend. Right, so preferably you have this 20 periods or 20 candlesticks for this indicator to be effective. Subsequently, when the price fall below the 20 um, 27 mark, then traders can consider take short positions. You can see on this chart, right? So you can play a stop slightly above the swing high and take profit, right, about twice the level of the stop loss. Okay, so this is the purist strategy using the mass index indicator. All right, so conclusion, some final words. So basically, the mass index indicator allows traders to predict possible trend reversal, right? Other indicators may fail to identify. So traders may use the mass index reverse bounce to determine the market tops and bottoms with high accuracy, right? High degree of accuracy. So this mass index indicator, right, will help chartists, right, to maybe possible to catch a falling knife, right, with a handle, and the handle is, of course, using these mass index indicators. Okay. So once this mass index indicators, typically they fluctuate between the mid-20s. So the readings that's near the high end of this historical range usually suggest to traders that there's a possibility of increased volatility. So always to look out for increase in volatility. So for this indicator to be effective, there has to be increase in volatility and decrease in volatility in the market or the asset that the trader is trading. So this will increase the chance of the price trend reversal. So although this Mr. Dorsey set the reverse bounce threshold at 27, traders or chartists, right, you can always consider to make adjustment to threshold level, either higher or lower. So if you adjust higher, maybe there'll be less signal, but if you adjust lower, then of course the next indicator will produce more trading signals. And do keep in mind that mass index indicator do not have this direction basis, so it doesn't tell whether is it bullish or bearish, just that there's a possible reversal. So we need to incorporate other technical analysis to interpret the market trend. So the direction bias that comes with this trading will depends on the existing trend, and of course what is the prevailing trend and the preceding trend. Right. So for traders who keep this mass index chart on the sideline, usually you want to check your favorite markets is about to end, like a big trend cycle, or is there going to be a start of a big trend cycle, which is a mass index indicator. Okay. So the last note, final note, is that traders, right, always advised to use wise risk management strategies right before they put their hard-earned money to work. Right, always use stop loss and sensible position sizing for trading. Right. So as you all know, I'm a broker with Phillip Securities and Phillip Futures, and these are some of the personalized services that I provide to my clients, and my clients will receive from me. So in the event if you choose to apply an MT5 account, right, for Forex, or you choose to apply a futures trading account, these are some of the services you can expect from me. Right. So for those who are new to trading, help you to strategize and develop customized trading plan, right, on the market they want to trade. Right. So you play the plan of trade, and then you trade the plan in case whether you want to trade Forex, want to trade indices or gold or commodity or crude oil, right? You can help you to strategize and develop a trading plan. Okay, so for those who are more active trader, you receive SMS and WhatsApp updates, right? So for active traders with the daily news and updates for market movement and market news that will help you to capitalize on the market opportunities. Right, so in the event if you don't use WhatsApp, I also use Telegram, WeChat, so and some other apps that they are not really good off. So you name it, I have most of the apps. So so hopefully you can benefit from my daily news update from this SMS and WhatsApp services. And I also provide coaching and trading guidance on using MT5 and Nova for beginners and new traders, and also for experienced trader, you want to know more function on how to use the MT5 and all that. Okay. So the other service that provides to conduct free review for you, right? To review your stock portfolio, your forex, your futures portfolio, right? And hopefully to help you to optimize your trading returns. And I also assist traders to execute and monitor their positions, right? If they're busy at work, right? I can help you to submit orders for you at behalf, like no extra charges. So the last but not least, right? So if you intend to embark on this new trading journey with me, right? If you apply for this MT5 account before the end of June, right? Before the 31st of June, you receive a intensive one-to-one coaching on the advanced price reversal trading strategies upon the new account funded account activation. So this session will be conducted by Zoom, so I teach you more concept on how to find the trend reversal using this mass index indicator. Okay. So what are you waiting for? Just scan the QR code end of this session and sign up for this live 85 accounts and enjoy this free trading session. Okay. So for interested trader, right, to remember open account and fund the new account right before the end of June for this free trading. Okay, so this I just go through some questions first. Okay, I have first question is can you show us how to get a max index indicator? Oh, okay, it's little show on the platform MT5 is available on MT5 platform. You just need to select this indicator and add it into the chart itself. So everything is computed right by the platform, the numbers and everything. So you just need to select the indicators on the platform right to add in this mass index indicator. Right. The other question I have is the what is the estimated accuracy of the price reversal mass index technique? Okay, this is a very general question. So again, it depends on the trader, how experienced he is or she is, right, on how to interpret the indicators, right, the change of trend and the signal itself, and how much the trader is able to risk for the trade itself. Okay, so it's a tool that traders use to find trend reversal. So if the trend is correct, right, the reversal is there, potentially, right, the traders then will gain financially from the trade itself. Okay, this mass index indicator, again, it depends on trader and how they interpret the signal and all that, and you need to add in other indicators to give you a better signal. So you can work in the all types of market condition and not just only in forex or stocks, it can also work in commodities like crude oil or gold or in Bitcoin if you're trading Bitcoin. Okay, so this is uh, the advantages of using this mass index indicator. Okay, so other question that I have usually for some of my clients who handle my trading is that they ask me, okay, what's the difference between a trend reversal and a trend retracement? Okay, so to some you may think it's the same thing, but actually it's different. Okay, so for price retracement, usually it's very temporary and usually take place within a larger trend. Okay, so this is a trend retracement, and then usually this trend retracement happens in the uptrend, and usually is characterized by a series of high highs and higher lows. Okay, whereas on the other hand, a price reversal is when the price changes trend. Okay, it's very obvious, like showing in the previous slide. There's a change from bearish to bullish, right? So usually the price loss that occurred previously, the price recover and recover back to where it originated. Price fell, so price changed from bearish to bullish. So this is the price reversal. Okay, so with this price reversal, what happens? The price is usually continuing reversal direction for extended period of time, and there are some chart chart feature like market tops, double tops or double bottom to show that there's a change in the trend. Okay, and for some traders, usually if they are more mathematically inclined, they want to make sure that maybe if prices fell with a certain percentage, then maybe to them that's a price reversal. Usually, for major sell down in the stock market, sometimes they use to 20%, like from the top. If the market fell like 20% from the top, maybe the market's in a bearish trend or something like that. So there's a certain number that some technical analysts will use, like maybe 20% from top. Okay, market is changing from a bullish to bearish trend. Okay, so for me, this is again depends on individual whether you want to use numbers to characterize market reversal. But for retracement, maybe in that case, then it could be less than 20%, maybe it's from 5 to 15% from the top, and that could be just a price retracement. Okay, so another common question that I get usually is when to use the mass index indicator. So this mass index indicator is usually used together with price action. So as you can see earlier in the slide that earlier chart, that you can't just use it individually. You need to know the price action. You need to understand how the market moves from the price action. For those who want to know more price action, you can visit my previous webinar, right? Teach on a lot about price action, how to find signal using the price action to buy and sell CFDs, right? To trade on CFDs. So with this mass index indicator, it shows that it will measure. Basically, what it measures is not just the high and low; it measures volatility, right? With this volatility that comes with the daily high-low range, and with that, it tries to predict the possible market price reversal of this contract or the product that the trader is trading, right? Could be stocks or CFDs or Forex. Okay. So with that, traders usually they find this with this three-step process which I mentioned earlier, right? So with that, can help them to increase their odds of trading success. So with this mass index reversal indicators, they try to find the possible market tops and bottoms. Right, so with market tops, traders try to sell high and then buy low, right? And then if they're able to identify the market bottoms, then they try to buy low and then they sell high. Okay, so basically this is the mass index indicators for them. Okay. So other question I have is like, why use the mass index indicator? I mean, there are other forms of indicator to find trend reversal. I mean, that's a very true question. Why use the mass index indicator? So, but basically because the price reversal trading is also one of the popular form of trading, right? Traders will try to find the market tops, right, for them to take profit, or for them who want to short, they try to sell high and then buy low, and then they try to find market bottoms, right? If it's market bottom, then they try to buy low and then try to sell high, right, when the market recovers back to the top. And so basically with this mass index indicator, right, you can increase the odds of finding where is the market top and what is the market bottom. Okay, so with that, it can give the traders the opportunity to be a market participant in the trend, right from the very start, right? So this will help traders determine the start of a new trend and can help to open the door for potentially providing a bigger price swing movement that will subsequently make higher price gains. Okay. So another question that I usually get is price index accurate measure of volatility? So mass index can be used to measure potential volatility using the previous price range, right? So basically the formula itself is designed such a way to determine the price range, and from there they try to project, right, the averages to the future price change in point on the chart. So that's why there's a bulge, right? The reverse bulge is what traders who use this indicator will look out for, the mass index reverse bulge. So if the price range of this stock index or stocks that the trader is trading is approaching a very wide range within a given period of time, then there's a very likelihood that they are suffering followed by decreasing volatility. So this will be followed together with the reverse bulge of the mass index, which will indicate that there's a change in trend and a change in price reversal. Right. Okay. So okay, just one more questions. Okay, so usually I have questions. Should I be a reversal trader or a trend trader? Okay, so basically these are two major school of trader, whether you want to be a reversal trader or trend trader. So basically for reversal trader, their strategy is very simple. You try to buy low and sell high. Okay, so buy at the market bottom and then sell at the market top. Or if you want to short, right, for reversal trader, you try to sell high and buy low. Okay, so this is a reversal trader. For trend trader, they will try to ride the trend. So usually they try to buy high and sell higher. Okay, so this is a trend trader on the upside. But if they want to short the down market, then they try to sell low and buy lower. Okay, so this is basically the strategy that reversal trader or trend trader. So for which one is style, right? It has its own advantages and the appropriate use. So for trend trading, right, they give trader the advantage of trading the direction of the prevailing price momentum. Whereas for reversal trading, it gives trader the option of, like mentioned, buy low and sell high, or you sell high and buy low. Okay, so for if a trader who doesn't know a style, then you'll be challenged for them to succeed as a reversal trader or trend trader. So traders, right, my advice is to need to develop a trading plan. So this is one of my service I provide, right? So if you're not sure you want to be a reversal trader or trend trader, right, sign up for an account and help you to decide the trading strategy, the trading plan, and factor in this price reversal trading strategy, right, to help the trader to catch the price top and market bottoms, right? So basically, my traders should find this the trading style that fit their personality. Okay, so trend the friend, right? Have the discipline to stay in the trade and ride the trend for trend traders. Whereas for reverse trading, right, usually is in a volatile market, right, market will reverse a very short period and need to take quick gains and try to ride on the volatility. It may wipe out the profits in a short period of time. Okay, so the advantage of trading reversal is that the traders may be in and out of market in a very fast and short time frame. Okay, so having said that, right, hopefully tonight's the strategy you can incorporate to your trading arsenal, and then I can apply it into your trading. Okay. Okay, let me see. Okay, so before I proceed to the anti-fi demo, just like to highlight to you that once again, Phillip Futures is the first company to introduce anti-fi platform, right? So the traders abroad for new experience. So not only anti-fi is the most advanced trading platform available in Singapore, right? It's completely free to use with zero commission transaction costs and comes equipped with amazing functionalities and trading features. So MT5 is only the most advanced and most sophisticated user-friendly platform ever introduced for retail traders in Singapore, but it's also the best ever trading platform conceived and designed, especially for traders that's absolutely free to use, like you and me. So just do remember to sign up for a demo or live account after this session and download a free copy from our website and try our training for after this session. So hopefully at the end of this webinar, we'll be able to start a mini business partnership and share many successful training stories for years to come. Okay. So right. Okay, just do a quick one. Okay, so basically I just want to show you how to add in the mass index indicator on this anti-fi because I'm going to run out of time here, about 5 minutes left. So when you log in, you see this price index, right? You just need to go to insert, okay, insert indicators, okay, and then you go to custom right here, and then look for MI. Okay, scroll down and then look for MI, and this is the one. Okay, so you can see that it comes up with the level 27 or 26.5. And then you can change the level from blue, Dodge blue, or something else. Okay, once you click OK, right, this is the indicator. Okay, so you can see here, this is the cable, right, GBP versus USD. You can see with the right indices. Okay, right. I tested a few times, right? This for purist mass index indicator traders, you know, you went up to 26.5, fell 26.5, tested 3 times, and then on the 4th time, you see here, right here, whereby, you know, it went up and then cuts and then prices rally up. Okay, so if you test about 2-3 times to tell traders, okay, this is possible. Okay, in a 1 minute time frame, right now, we look at 1 minute time frame live chart, that the price may reverse. Okay, there's a possibility that price will. So if you shorted, then maybe the traders may consider to reduce position, take out some gains from the market, or if they have no position, they can consider take some long from here, because you can see that, you know, there's triple bottom, right? Three tests of the mass indicator, because if the traders needs to be like really follow the rule right down to the dot, then, you know, and the best is the 4th one, whereby the prices the mass indicator went up to above 27 and then fell below the 26.5. And you see that the price action shows that the indicators that you know, the trend has changed from this bearish to bullish, right? So remember the 3-step process. The first step is to find the prevailing trend. The big trend is a, you know, downtrend. This one mini chart, right? So a series of low highs, prices fell, rally, right? Low highs, and then fell again, rally, fell again, and then it's been consolidating for like the last 1 hour or so, right before this webinar started. And you can see that at the bottom, right, the price, the mass index, surprisingly, they went up above the 27. That means, you know, traders don't buy, because, you know, it didn't go up to 27 and fall below 26.5. If also for traders are more aggressive, if they choose to long, then you know, they may have suffered some financial loss if the stops are triggered. So for that, you know, these are clues that traders will look out for. There's 3 possible, that triple bottom and then prices rally from this. Shows that traders that, you know, prices is change from bearish to bullish, right? So this is the for purist traders that, you know, this is the mass index trading indicators, trading strategies for bearish to bullish or to long strategy. Okay, so basically this is the mass index indicators. Okay, so right, I'm going to be running out of time. I only have about 2 minutes left, so don't forget to scan our QR code to download a free copy for the MT5 from website and try out our platform after this session. So choose to trade with the most advanced trading platform in Singapore for MT5 with Phillip Futures, right? So it's my QR code, and then if you have other questions, you can drop me an email, right? And you can apply account within 5 minutes if you choose the Fast Express option, which comes with application using your SingPass. So the SingPass, right, with all the information in, your application can be processed in 5 minutes during office hours, right? Terms and condition applies, okay? And do not forget to scan our QR code again, download a free copy of MT5. And for other promotions, you can scan our QR code to find out more details. Okay, so this is our recent promotion. You can trade US stocks CFDs with 0 transaction cost and try out demo. Okay, so that's all for tonight. And thank you again for being such a wonderful audience for our webinar tonight. And so a link for this recording will be available in our follow-up email tomorrow. So if you have any other questions on the webinar or would like to get started or any of our products, simply reply to our email and we'll try to get in touch with you as soon as possible. So my name is Stephen Ong again, your presenter for tonight, signing off. Once again, happy trading and have a wonderful night. Thank you very much for your attendance.